Michael Spencer is the CEO of Next Group and joins us now on set. Good morning, Michael. Very nice to see you. Thank you very much indeed for coming to see us in our new building.
Yes.
Jay Powell talking about blockchain, talking about how excited he could be potentially about that. But let's talk about Bitcoin for a moment. Irrational exuberance, Greenspan's phrase, come to mind here. Are we seeing this writ large across the markets, though, at the moment? What is your sense of what is going on?
Before we talk about Bitcoin, which I'll happily come to, let me congratulate you on this wonderful building.
Thank you very much.
You must be thrilled.
We are.
And not only that, but it's wonderful to see such a statement of support for London as a financial centre.
Absolutely. The boss is hopefully very happy with it.
I'm sure he is. Bitcoin. You want to talk about Bitcoin?
I'd love to talk about Bitcoin. Well, I'd like to get kind of, is this canary in the data mine? Is this a signal kind of, are we approaching one of those moments where kind of irrational exuberance, and that took a while to get into kind of reality? Are we starting to see that happening?
Well, Bitcoin is a bubble. Cryptocurrencies are here to stay, by the way.
Yep.
And the concept behind cryptocurrencies, I think, has potentially got some considerable value. But Bitcoin is undoubtedly a bubble. But the only problem with any bubble, whether it's the South Sea bubble or the Dutch tulip bubble, you have no idea if it's going to double before it halves. But at some point, it is going to go back a hell of a long way back down. But between now and then, who knows? It could hit $20,000 pretty damn quickly. So and you can't short it, of course. That's the other thing. So
soon we'll be able to.
Yes, you can't. Yeah. But it is a bubble, and actually, overall, you have a sense in the marketplace that market valuations are high, but that doesn't mean to say the bull market can't roll on a bit. I mean, there's still, generally the tops of bull markets are symptomized when everybody is bullish and assumes that things can only go one way. We're not there quite yet, I don't think.
Yeah, quite yet.
Yeah.
Are we, is it on the horizon?
I think we are getting signs of incipient overvaluations, yes, generally.
Yeah, OK. Matt's good.
Do you not see, Michael, you work obviously very deeply with technology. Do you not see any need for a technology like the blockchain, or does that just seem to you completely separated from Bitcoin?
They are separated. Blockchain technology has enormous implications and potential, not just in the financial markets, but across many applications. And we are looking to use the distributed ledger technology in many of our business processes going forward. And it undoubtedly can have a positive impact on many businesses, improving their efficiencies. Potentially, for example, in due course, leading to real-time settlement on financial transactions and securities transactions.
When you look, though, across, Bitcoin, as Guy mentioned, I believe earlier, is just representative of one momentum play right now. All of the momentum plays around the world seem to be on a roll. Just look at the S&P 500 yesterday, up almost 1 full %, which is 2.5 standard deviations away from its 30-day norm. What do you think this means, that all of these momentum plays are sort of barreling up? Does that mean we're due for a spill soon across the board?
Generally, when momentum is that broad, it's generally better to go with the flow rather than fight it. But whenever you see that sort of momentum, equally there are flashing signals that this is perhaps not a time to be piling in and chasing everything as everybody else is.
When you talked about challenging markets a few weeks back, like the stock took a knock on the back of it, you guys, obviously volatility is an important piece of the puzzle when it comes to what exactly your business is going to be doing and the performance that it's going to generate. I've got the MOVE index. We'll be able to throw it up here, which is the Treasury sort of volatility index. I'm sure you know well. When does volatility start to rise? Is it a 2018 story? Is it a 2019 story? What does your radar tell you?
My radar tells me that volatility ought to start increasing because rates are starting to move. Tapering is, government debt is not going to be bought by the Federal Reserve. And so, to me, the structural signals are there that volatility should start coming back. But it's a bit like forecasting, when's the stock market going to stop going up every day? It's going to happen, but we're not quite sure when. I think it's likely to be a 2018 story, though.
OK. And in the meantime, what do you do with the business? You just keep taking costs out of it and you keep...
No, there's an ultimate limit to, improving a business
Yeah.
by taking costs out. I mean, you've got to be very careful about cost cutting and how you handle it. I mean, really, the thing you try and do is you think, where is the business going to be in 3, 4, 5 years' time? What are the steps you should be taking now to make sure you're best placed for the medium-term future? What new projects should you be involved with? What are the new opportunities? I mean, for example, we've always had a big position in Asian currencies, particularly in Chinese renminbi. Is that going to be a good story going forward? We think a very good story. We've made a big push recently in Latin American currencies. Lots of things like that.
You also have taken now a decent position in Amsterdam. Let me ask you about the Brexit breakthrough that we're reporting on this morning. Did you expect the UK to eventually cave in and pay the bill?
I don't think it's a cave-in, by the way. I think Theresa May has been, of course, much criticised, but actually I think she's doing a decent job in really difficult circumstances. This is a divorce negotiation in all but name, and it's a very complicated one. On top of that, probably the most complicated negotiation this country has been involved with since at least the Second World War. At some point, we were going to put some money on the table. That I've always known as a foregone conclusion. The question is the quantum, and I think she's probably handled it very well, left it to a good moment. It will take us to the next stage of negotiations. I am, funnily enough, on the mildly more optimistic side of this debate than some of the sceptics. If you were to read the press, the whole thing looks like a disaster. I don't believe it is a disaster. Progress was never going to be rapid. All of these complex negotiations frequently only get resolved towards the very end. But these will be step progress and step changes. I think it's going in the right direction. I think Theresa May's position as Prime Minister is stable. I think it is very unlikely she'll be deposed in the foreseeable future, and I think the Conservative Party, particularly the Parliamentary Party, is rallying around her and supporting her to make progress on these critical issues in the national interest, by the way, and it is clearly in the national interest to proceed as steadily as we can with these negotiations with the Europeans.
So how much clarity do you expect to be getting, or do you expect to be getting some clarity, I should ask, in trade negotiations as soon as the beginning of 2018?
Regrettably, I think these things are always difficult. And so don't expect, I think, big initial movement. But bear in mind that it is in the considerable vested interest of Europe to achieve a deal, as much nearly as for Europe to achieve a deal with us as it is us to achieve a deal with them. Europe exports has more trade with the UK than it does with China, Russia, India and Brazil combined. So they have a huge interest in achieving a trade deal with the UK. And I hope that common sense will prevail, that it won't become a war of attrition. That achieves nothing for either side, by the way. And that common sense will prevail. We will achieve a trade, I think, on manufactured goods probably much more easily than services, of course, not least of which because Europe is a major net exporter to us.
What's the Amsterdam's the contingency plan, right?
Well, not a contingency plan. We've obviously gone through all our services. We do a lot. I mean, Next is a global company, by the way. So although we happen to be headquartered in London, we are truly global. In fact, funnily enough, New York is our biggest physical presence. But we've done, obviously, we've been doing business with Europe for years and years and years. In any case, we have an office in Stockholm and also in Milan, as it happens. But for a variety of reasons, one of our business services, very successful part of our business, BrokerTech Europe, which does a very big volume of European government debt and an enormous volume in European repo, by the way. We have just decided to move the domicile to Amsterdam, so it's properly passported within the EU. This is not going to, because it's a technology business, does not necessitate the move of large numbers of staff.
Fragmentation looks like it's going to be an inevitable part of all of this in Europe in terms of the financial services industry. Is there an opportunity within that fragmentation for your business? Do you're an entrepreneur, you like investing in things, you see gaps that may exist that others maybe don't. Fragmentation looks on the surface to be a threat. Where's the opportunity within it, and is there one?
Well, remember, our businesses are so technology-based now that the actual physical location...
So it doesn't matter where this stuff is?
I think it's less of a big issue than some would represent. There are some important issues, though. For example, I mean, obviously one of the big issues is clearing of euro derivatives going to be moved away from London.
It's incredibly complex in terms of trying to figure that one out. The governor of the Bank of England was talking about that only 2 days ago.
I think the notion of it trying to be moving it to Europe is personally quite ridiculous.
Where do you see opportunities? You invest in fintech. Where is the opportunity right now?
I mean, I think really, in the short term, from a European perspective, it's navigating how you place your chips and where you are. From a global point of view, there is so many opportunities everywhere. Financial technology is shifting fast, and what should you be doing next? What are the... And there's plenty going on.
When we see MiFID, when we see talks for Basel III look like they may conclude at some point in the near term, I think there's so much regulation still to come. You've made an investment in a regulation consultancy. It's called Temple Grange Partners. Do you think that regulation is really the place to put your bets for the future of the financial services industry?
You're quite right. I've invested in Temple Grange Partners. I think it's worth noting that that's a personal investment by me, not an investment by Next. It's a business started by a long-standing friend of mine, and it relates to compliance reporting, and I think will be a very, very successful business, and indeed has been very, already, since its launch only 6 months ago, very successful already. But yes, of course, MiFID, I mean, talk about complexity. MiFID 2, which has been quite a controversial piece of new regulation. Some parts of it are good, some parts of it are less good, but nevertheless brings with it a whole series of responsibilities about trade reporting that creates a new industry, really. And we have a reg reporting business, brand named Abide, that has been very successful in recruiting clients to do their trade reporting when the MiFID 2 comes into place next year. And hopefully that will generate a very considerable amount of revenue, and we're pretty optimistic about it.
Does MiFID... you talked about the fact that you think profitability will pick up once MiFID kicks into gear. Does MiFID work out of the box? Because everybody tells me that it ain't going to work out of the box, that it's going to take a while for everybody to get their ducks in line, despite all the work that's already been done, and as a result of which it's going to be a slow burn. Is that your kind of interpretation of what's likely to happen here as well?
I think MiFID has been is a materially over-engineered piece of regulatory, and without going through every detail about it, I think there's been a lot of overkill in MiFID.
So it's going to be hard. It's going to be hard for the markets to kind of get over-engineered. It's going to be hard to get everything, all the bits to work on day one.
Absolutely. And also, you know, one of the sad things about MiFID, in my opinion, is that it will make new startups and innovators make it more difficult, because it just creates greater complexity, greater barriers to entry, and will be counterproductive in that respect. And by the way, I'm not a huge believer that it necessarily makes the financial world that much safer.
What do you think about the Basel negotiations? They've taken forever. There are signs that they could wrap up soon. Are we going to have to start a whole new series of regulation after this? I mean, it seems never-ending in a way.
I don't consider I have the expertise really to ask that. I'm not close to the inner detail. You've got a gentleman sitting not very far from here in a building about 100 metres away who's probably a better person to ask than Governor Carney. I'm sure will steer you in the right direction.
Let's kind of wrap it all up. We're coming to the year end. 2017 has been turbulent but not volatile, which is a strange thing to say. Give me the one thing that I should be watching for in 2018. Give me Michael Spencer's as he sit down on New Year's Eve to dinner and thinks about what he's going to be looking at next year. What is it going to be?
For me, UK point of view, are we going to make a proper breakthrough on Brexit? There's so much pessimism around Brexit at the moment. Everybody's taking a negative view on that. It's entirely plausible, I think, that the situation might begin to look better next year. Who knows? Sterling could rally quite a bit.
How's this morning?
A little bit.
A little bit.
Could go quite a way. I mean, bear in mind, the market is very bearish of state cable, isn't it? I mean...
what's your target? Say it goes right. What's your target on cable?
I mean, it could pop up to 140 easily.
Right. I think that's kind of consensus. The market's kind of expecting.
No. The marketplace is very short cable.
I appreciate that, but if you get a big breakthrough, like the idea is that you could certainly pop significantly higher. Given the positioning, then the market's all one way.
Well, listen, I mean, forecasting markets, as we all know.
I know, that's what I'm trying to get you to do.
You know, sometimes you get them right, sometimes you get them wrong. I think the other thing, of course, is very interesting to watch is see if Trump makes any progress on his tax reform in the United States, because a lot of the market rally in the States is assuming there's going to be some good progress on that. What are the other things?
Two things to watch. Well, there's two decent things to watch out for. Matt, he thinks we're going to have a pop on cable.
Well, you know, in that respect, and we have a pop on cable at the moment, obviously, that you're looking at right now. What do you think about the Financial Services Center in London? Obviously, we've just built that big building there. You've got your hub in London as well. But do you think we're going to see a lot of firms start to move out in 2018?
Obviously, we don't know what the detail of the we're nowhere close to knowing what the detail of the settlement is going to be in the Brexit negotiations on financial services. It's the most complex part, in my opinion, of the upcoming deal. Obviously, the UK is a substantial net exporter of financial services, not just financial transactions, but legal and all insurance and all the other supporting services. We're a big net exporter to the EU. Financial services, though, we're a big importer of manufactured goods. The deal on manufactured goods, I think, will be relatively, of course, more straightforward. Financial services is the difficult area. But London's position, I think, as the leading financial centre in Europe will, in my opinion, remain intact. Indeed, your good organisation, I think, is a testament to your long-term view. You've built this wonderful new HQ here, highly impressive. And your leader has got a track record of making the right long-term calls. So I think London's position as the principal financial centre in Europe is genuinely assured. I find it mildly amusing when Paris, which until very recently, as far as I can recall, was very keen on introducing the financial transaction tax and imposing it on every country in Europe, particularly in the knowledge that this would damage London, now suddenly represent itself as welcoming and being financial market friendly. I don't see how anybody can't see through that. There's a fairly shallow commitment to financial services. Germany, although, of course, Frankfurt has quite a lot to offer, I don't believe the Germans particularly see them committing itself to a huge support of building out their financial services. So there will be a move of parts of financial services from London. Obviously, the insurers, Lloyds have chosen Brussels, we've chosen Amsterdam, others, Barclays have chosen Dublin, and so forth and so forth. There will be a small movement, I think, of services from London to Europe. Equally, if Europe to use the English parlance, over-eggs the Brexit negotiations to damage London's financial services capability, frankly, it's more likely those services, in my opinion, will migrate to the United States or perhaps the Far East than to Paris or Frankfurt. So Europe will be net materially worse off if they genuinely seek to inflict purposeful damage onto the City of London, to no benefit for Europe as a whole.
Credit Suisse has the highest expectation for what cable does next year. It's at 146, so they're even higher than you. The average is a little bit lower. Michael, great to see you this morning. Thank you very much.
And very good to see you too, Guy. Thank you.
Thank you for coming to see us. As we've been talking about here in our new building, Michael Spencer, the CEO of Next Group.